Today, the digital evolution revolution. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Today I'm joined by Caroline Byler, the CEO of BTC Markets. Hi there, Caroline.
Hello, how are you doing?
Yeah, pretty good. And you must be relieved now to be free from lockdown.
Very much so. We're delighted to get back to some kind of normality here in Melbourne.
Finally, yeah, I hope it stays there. But look, it's been a busy time in digital land, hasn't it?
Absolutely. Certainly waking up this morning and seeing the rise in Bitcoin overnight. We've gone, overnight it went from 22 to 24,000 Aussie dollar on BTC Markets. But in March earlier this year, you could have picked up a Bitcoin for about $7,000. So it's been on quite the run.
It's pretty amazing. And people are telling me that more people are turning to the digital alternatives, and the volume of transactions has also increased.
Yeah, absolutely. So for us, we did a quick tot of our numbers, and kind of year on year to the end of October, we saw a 37% increase in trading numbers. So just in terms of the number of trades that are coming through our platform, we're seeing an exponential rise. It's been fantastic. But we're also kind of hearing feedback from others, either in the industry or even those that are in the traditional financial markets, that they're seeing that spill over too.
Yeah, and I think there's a few things. So in my surveys, I've been tracking this as well. And one of the questions in my surveys is, have you used likes of Bitcoin, et cetera, et cetera. And what's interesting is that the spread of people in terms of age and demographics has completely morphed from where it was just a year ago.
Yeah, absolutely. I mean, that's certainly reflective of the trends we're seeing on BTC Markets, where traditionally the customer or the client base that we would have had would have been 25 to 45-year-old males who live along the east coast of Australia. That definitely has shifted. We're seeing a far greater increase into the older age bracket in particular. We're also seeing a lot more SMSFs. That's actually the biggest kind of intake of clients we're seeing at the moment is around SMSFs coming on board. So that's been quite a dramatic uptick over the course of the year. But I mean, I know this is something that you and I have talked about on many occasions over the course of the year, is this inevitable shift, this inevitable change. And we certainly were seeing it coming kind of from early on. So delighted to see it's finally here.
Well, and I'll tell you, one of the things that I'm seeing in my surveys is that people who had money sitting in deposit accounts, right, are now saying, well, that's ridiculous. The Reserve Bank has taken the rate to a point where it's ridiculous. I get nothing, right? So I now know I have to expose myself to some market environment. And it's interesting that cryptocurrencies are on the agenda.
Well, I think as well, it kind of reflects how cryptocurrencies and digital assets have matured. I think that, even 18 months ago, it would perhaps have been kind of thought to be quite out there, even in an alternative asset class, to be investing in cryptocurrencies and digital assets. That's no longer the case. Bitcoin in particular has long been in the conversation with gold. And I think that that's a conversation that's naturally reaching its point now where investors are having it as part of, a natural part of diversification of their portfolio. And from our point of view, we certainly welcome that trend, not just from a purely commercial point of view, obviously, as the head of an exchange, but simply because as somebody who's been around this industry for as long as I have been, even though it's been around for a relatively short time. But it's fantastic for us to see, the conversation going mainstream, to see that people are embracing it and kind of really striving to understand what the opportunities can be here.
And what's your sense? Are people trading or are they tending to buy and hold? Because I'm seeing some changes in my surveys there that people are actually regarding this now not just as simply, highly speculative, but beginning to say, well, maybe I should hold this and just see where it goes.
I think so. Well, I think it's also about the particular type of asset class that you're talking about. Obviously, all of them are pretty liquid, so you can get in and out of your positions with relative ease. Certainly, in our exchange, that's the case. But I think it's about the different kind of what they offer and what they bring to the table. And I always kind of go back to my dad as the case point in all of these examples. But he has discovered and is very much into Ethereum. He is really into what's coming with 2.0, which is due out, as I understand it, at the start of December. But I mean, his background's engineering, so perhaps that's why it particularly resonates with him. So everyone kind of finds their groove, finds what appeals to them as their entry point in. But yes, so to your point, yes, there's certainly, as I say, we've seen that increase in trading volume or trading activity by 37%. So clearly people are being busy out there. But also I think that there is that sense of accumulation, that wealth accumulation, particularly perhaps investors around my point in life.
Well, it's certainly very interesting, and I've been watching some of the comments that I get in my community, and there is a bit of a sense of there is a sea change underway. Not quite sure how it's going to all evolve, but certainly the eternal security of bank deposits with rates so low and with risks of bail-in just changes the tenor of the conversation. There's something else though, and that is, of course, that there's a continued talk about FedCoin in the US and other central bank digital currencies. And I just wonder whether this is going to up the ante in terms of actually the battle ahead between the private cryptos and the sort of the central bank digital currencies. What's your current read on that?
So with CBDCs, I mean, it's incredibly early. But I think one of the points, and I know this is something that you yourself have covered in previous discussions, is around the design of the coin. And we look at the kind of the China example where, to our taste anyway, it's quite an extreme, I suppose, invasion of privacy, if you like, the tracking capabilities around it and how they can turn it on and off, and it is so tightly controlled. And there are some very clear concerns from our point of view around that out here in the West. But one would assume then that would be taken into consideration in the design of any coin by other central banks. I know Christine Lagarde has been talking a lot about it, and the expectation within the Eurozone is that it perhaps is something of an inevitability. But the concerns are quite rightly around tracking spending and turning on and off, and the fact that with paper money out in the cash economy, they can't see what you're spending it on, whereas with crypto, or sorry, with a CBDC, they can. But here's a point too with that CBDC, just so to kind of help the listeners understand, you don't need to have it on a blockchain in order for it to be a CBDC. So that to me would sit under the broader banner of a digital asset. And certainly we're seeing kind of alongside all of this, that development of the digital asset class as much as it is beside the cryptocurrency and the CBDC.
Yes, it's part of the constellation, I'm still not sure whether we're going to end up with a contention between cryptocurrencies and CBDC, or whether in fact it will be all part of an ultimate universe. But you're right about the issue of control and tracking and the ability to be able to pull the levers. There are central banks who feel a bit impotent at the moment with taken rates down really low, thrown lots of quantitative easing into the system, and not a lot's happened. And of course, there are many people talking about a digital reset where effectively they try to be able to sort of change the game. Now, my own view is that's probably a bit overblown at the moment, but it could well be there in the background. But I don't necessarily see an either or here. There's probably room for both parallel tracks. But I suspect that the idea of the cryptocurrency being effectively, much less easy to control because of its devolved blockchain structure is going to still hold, quite a lot of power in the conversation.
We could understand why something like a central bank would be concerned about, another tranche of currency, if you like, that they can't control. I can completely understand from their point of view why they would have those concerns. And on the flip side of that, I can, for the more strident members of the cryptocurrency community, they're like, get your hands off my crypto. So I can understand both points of view. And I think there is that, and will be that tension between both sides until kind of time washes through and we see where all this evolves to, because at the moment there's still so much that's just pie in the sky, and that still has to be. I mean, it's also a sense of like the public has to understand and catch up. I remember when the Internet Fest came around, and there was a learning curve. It's a completely new concept, and I think that's exactly what we're going to see here as it goes mainstream. But from our little perch here in Melbourne, we've certainly seen over 2020 that transformation, that understanding starting to really gain some traction. And certainly the conversations I'm having with kind of perhaps the more atypical investors in my social network, they've definitely grown. I'm getting pestered. My phone is ringing, and which is really great, and I'm really excited about it because we've gone from something rather niche to as I say, teetering on the edge of the industry.
Now, one of the other questions I wanted to briefly explore with you is the alignment or connection between gold and crypto, because there's some really interesting things going on there at the moment.
Yeah, absolutely. And I suppose that for us, we can see the use case for gold as a digital asset. We've just recently launched Meld Gold on our exchange, which is very exciting for us because it's like the digital, gold certificate in digital format. And for us as well, I see that perhaps as a stepping stone, is like that bridge investment between people who are very comfortable with gold and who understand what gold is about, but are curious about digital assets and want to dip their toe in. And so this is a lovely gateway for them. But equally then for people who, perhaps hold quite an extensive amount of crypto, gold is that diversification for them into a traditional class. I think the two of them, digital assets and cryptocurrencies sit quite nicely together. I actually think they're quite sympathetic to one another, although they both serve different functions. But in terms of liquidity and activity out in the market and acceptance around it, obviously gold is the winner in terms of acceptance. But I think that as we repoint our economy and the global economy, they're both going to be, I suppose, parity in the sense of in the mindset of investors. That's certainly something for me anyway that I'm seeing. But for us as well, I think what's really exciting about gold in a digital form is the ease in which to buy it. I mean, for me as somebody who's obviously curious about making these investments, it wasn't until I could get it in digital form that I actually bothered to buy gold. And I know that sounds quite, but it suddenly became easy and transparent for me. So I suppose maybe I'm just basing all these business decisions on my own personal point of view.
Yeah, and I guess there's an interesting, question and a caution that there has to be a significant correlation between the underlying gold and the digital transaction of the gold, right? And there has been some fears about whether, in fact, there's a one-to-one relationship or a many-to-one relationship. In other words, more digital representation of gold than the underlying gold. So that's something that I think people need to be conscious of.
Well, I think it's also about do your research. I think it's about do your research into the project that you're buying into. Make sure that you're comfortable. Make sure that you understand the setup and the background behind it. And that's caveat emptor, but that's the case with any kind of investment. But I mean, it certainly wouldn't be off-putting to me to have to do that little bit of work. I mean, I would expect anybody who's making an investment to do that bit of legwork into it and not to make those assumptions and not to assume that that's the case. But from our point of view, I'm quite comfortable with where I've put my little investments.
Yeah, fair enough. Now, in terms of over the next 2 or 3 months, are there any other big crypto events on the horizon?
Well, as was mentioned kind of at the start, with Ethereum 2.0 coming out, that's going to be quite significant. And certainly for us, since the announcement came out a short time ago, we've seen Ethereum equally go on a bit of a gallop in terms of how its price point has increased in our exchange, which I think is reflective of the anticipation that this is coming. It's certainly a project where the can has been kicked down the line a few times. So it's great to see it coming to fruition for the end of this year. That said, kind of as we roll into January 21, I think perhaps the bigger story is going to be around Bitcoin. I think that's where we're going to see the main activity, if I had to speculate, simply because if you're looking at where the US is going between now and January, that's going to be a really interesting time period. And kind of cryptocurrency and perhaps Bitcoin in particular is known for being a bit of a risk-on asset class. And I think there is an appetite for risk in the market, exactly as you've described, with incredibly low interest rates and uncertainty that's out there. People are just trying to find a place to get some return. And so something like Bitcoin being that deflationary separate asset class has got a real opportunity between now and January, and let's see where we go. It's certainly, it's moderately reflective of increases that we saw in 2017, where it started at the tail end of that year and then went through into 2018. But where I think it differs this time is around it's just around the demeanor behind the market and how the market has grown. As I say, it started off kind of around March time. I think we hit the low of the year at about 7,000 to 8,000. And then we saw just that in gradual increase. It was a few dips. I think it dropped 10% twice over the course of the growth of the year. But it's just continued that upward trajectory. But it's always felt in a rather measured way, more so than in 2017 and into 2018, where it went quite active, quite busy, quite quickly. I'm trying to find the right words to describe that without trying to add any more heat to what happened.
Yes, you don't need to add more heat. There's plenty that you can see from the chart where it's gone. I'll put the chart up so that people can see it. But I guess the other point there is that there are more and more major players, financial players, hedge funds, all now effectively putting their hat in the ring with regard to this stuff.
Yeah, it's been a bit something of a unrelenting wave of good news, really, for people in the crypto industry. The last month, 6 weeks, 2 months, or even just the course of the year. I mean, Mo Paul came out just recently talking up Bitcoin, and he holds it, and Jochen Miller is the same. He's made a call between Bitcoin and gold. So I mean, there's a lot of. It's not noise. I think it's just people now coming out and being public about their interest in it, or being public about landing. And that was, I suppose, it's something that we'd always foreseen at the start of the year, that's where this was going. But with that expectation, with that arrival rather, comes the expectation around the industry, around how people can access its services, the infrastructure that's built around it. And as I say, we'll see that mirroring perhaps the traditional markets in terms of its infrastructure, in terms of what services are there, and how it positions itself with the arrival of that. But it's also going to impact, perhaps some of the highs and the lows as it goes through, because when you've got those big players coming in, it's suddenly a very different ballgame.
Well, as I titled this show, The Evolution Revolution. And in a way, I think that's where we are. The tipping points continue to be in front of us, I think. And it is a remarkably interesting time to be tracking the industry. So I really appreciate your time today. And we'll have a bit of a conversation again down the track as these events continue to evolve and revolve. And the revolution is definitely, I think, on the horizon.
Oh, absolutely. I mean, certainly for me, this has been a fantastic year to be involved in digital assets. I know I woke up with quite a start when I saw the news, because I checked my phone first thing and saw the news overnight that we've gone from 22 to 24K. And that just gives me such an energy and such a start to the day. Just the excitement around this is just, it's addictive.
Well, and we always say to people, do your research, be cautious. And don't believe all the hype, but nevertheless, this is more than hype now. This is definitely a series of transformational events that are happening, and I think people need to take the crypto world pretty seriously at the moment.
Absolutely.
Thanks for your time.
Thank you very much. Thank you.